Okay. Good evening to all of you. In Monday's class, we had started with various performance evaluation measures and all financial measures we had completed. Discussion on all financial measures was completed in Monday's class. Just to recap or revise, performance measures for evaluating the performance of divisional managers in the organization are divided into two categories: financial measures and non-financial measures. Financial measures, we have different types like ROI, that is return on investment. We have RI, that is residual income. EVA, economic value added. And we also discussed that there are certain non-financial measures. One of them is triple bottom line. So that is TBL. And organizations in real life use financial as well as non-financial measures for performance evaluation, both. If you recollect, I had mentioned to you that no management can afford to look at only financial measures in isolation for evaluating the performance of a divisional manager. You always have to use financial measures in conjunction with non-financial measures. And non-financial measures are equally important while evaluating the performance, particularly when the company is having its obligation towards stakeholders. So gone are those days when the responsibility was restricted only to the shareholders. Now the organization in modern times have responsibility towards the stakeholders, which include a large community of people like vendors, customers, government authorities, financial analysts, employees, whosoever is associated with the business. They are business partners, and therefore their requirements have to be taken care of. So from that perspective, the overall performance measures are very important for any organization. We had also discussed in Monday's class about two terms. One is KPI, that is key performance indicators, and second one is critical success factors, that is CSF, critical success factors and key performance indicators. I mentioned to you that critical success factors indicate what? What are the things which organization wants to achieve? So it answers the question what? Critical success factors required for a success of any organization. And in order to achieve the success, in order to reach the target critical success factors, we need to have KPIs, that is key performance indicators. So key performance indicators indicate how. Critical success factors indicate what, but key performance indicators indicate how to achieve those mission, how to achieve those strategies for the overall goals of the organization. So with this, we had ended our Monday's class, and I had told you that in Wednesday's class, we will touch upon qualitative factors or qualitative measures of performance evaluation. I will just share the screen to go through various qualitative models. First we look at is balanced scorecard, a very important concept that was developed by Kaplan and Norton. The concept of balanced scorecard. This concept takes into account financial as well as non-financial measures of performance evaluation. As I mentioned to you, when we look at financial perspectives, when you look at financial goals, when organization is concerned with how to meet the expectation of shareholders in terms of ensuring higher EPS, EPS is earning per share, ensuring higher ROI, return on investment, higher RI, residual income, positive EVA years after years. Of course, these are the performance measures at the back of mind. Every organization is into business. It's a business venture, business entity, and not for charity. So therefore, achieving these organizational objectives in terms of financial measures is extremely important. But merely investing in various assets, tangible assets, physical assets, financial assets is not sufficient. Ultimately, you should be in a position to exploit intangible or invisible assets of the organization. And when we talk about invisible or intangible assets, the first thing what comes in your mind is, of course, accountability of the organization towards customers, towards its employees, towards community in general, and overall welfare and well-being of the society at large. So overall development of the markets, overall development of customers, introducing new products and services, meeting the expectations of target customers, etc., etc. So just looking at financial perspective is not sufficient. We should look at other perspectives as well. And with that objective, Kaplan and Norton, remember the names of these authors who are the generators of this theory, Kaplan and Norton. Kaplan and Norton. They are the authors of this philosophy, this particular theory called Balanced Scorecard. Balanced Scorecard is known by its abbreviations BSC, Balanced Scorecard. Mainly, they have divided the performance measures into 4 business perspectives. The first one is financial perspective. Second one, customer perspective. Third one, internal business perspective. And fourth is learning and growth perspective. These are the 4 perspectives in which the performance measures can be divided. So when organization is looking at its performance against the targets, one should be in a position to measure the actual performance across all these 4 perspectives. For example, when we talk of financial perspective, the question that is answered while looking at financial perspectives is, how do we look to the shareholders? How does organization looks to the shareholders? Are we meeting expectations of the shareholders? Shareholders are mainly interested in enhanced profitability, in enhanced wealth, and also in maximizing EPS of the organization. If EPS is maximum, they will get share in the EPS in the form of dividend. And therefore, the dividend per share will be maximized if EPS is high. The wealth of the shareholder would be maximized if market price of the share is always kept at a higher level. So when we look at the expectations or aspirations of the shareholders, mainly they are in terms of increased EPS, increased market price, and thereby increased wealth. Now, in order to satisfy these requirements or expectations of shareholders, the management of the company has to strive hard. It has to perform in its business operations by bringing consistent profit years after years. That means when you look at financial perspective, obviously the divisional manager is concerned with bringing the higher earning per share, bringing profitability of his division, and that too on a consistent basis. Basically, it is implementation and execution of all the strategies which are relating to increase or growth in revenue, growth in earnings. Now, which are the KPIs, which are the key performance indicators when we talk about financial perspectives? If I ask you this question, can anyone tell me what are the performance measures over here? Financial perspective, when we talk about what are the performance measures? What are the key performance indicators that we look at? Yes, number 1 is increase in sales or increase in revenue. Second one is cost reduction. An organization which is able to reduce its cost or optimize its cost, maintain it under control, is in a position to maintain higher profitability. So profitability is reflected only when you have higher sales and lower cost. So these are 2 important parameters in profitability, that is cost and revenue. We also have the market share, again as one of the performance indicators. Market share in terms of your growth in revenue, growth in the market, size of the market, etc., etc. So financial perspectives or financial measures will consist of KPIs like operating income or residual income or ROI or economic value added, growth in revenue, reduction in cost, asset utilization, etc., etc. I repeat, financial perspectives consist of key performance indicators or the measures, performance measures like ROI, return on investment, RI, that is residual income, we have EVA, economic value added, then we have cost reduction, growth in revenue, growth in earnings, we have asset utilization, etc., etc. These perspectives are there at the back of mind of any business management, right? And we are into business, therefore all the time we will look at the welfare and well-being of the shareholders. So I think financial perspectives do not need any further elaboration because in detail we had discussed about these perspectives, EVA, ROI, RI, etc. in Monday's class. So we move to other three performance measures, other three perspectives, and that is customer perspective, internal business perspective, and learning and growth perspective. Now, when we talk about the customer perspective, see the approach is altogether different. In financial perspective, the approach was how do we look at the shareholders? That is what exactly shareholders perceive. How do the shareholders perceive? How do they look at our company and what exactly they expect from our company? So how do we cater to their needs, right, in terms of financial indicators? That is financial perspective. Customer perspective, the question arises, how do customers view us? That means what is the expectation of customers? Here, of course, we talk about customer delight all the time, right? And in balanced scorecard, we talk about financial as well as non-financial performance measures. So now onwards, remaining three performance measures are non-financial in nature. That is customer perspective, internal business perspective, and learning and growth perspective. So customer perspective, when we talk about how customers look at our business, what do they expect from the company? Our customers expect, of course, wow effect, WOW, wow. It's something like wow effect, that's what they expect. We always say customer delight. Customers should always be happy, not only in terms of quality product and quality service, but also in terms of after-sales support that is provided. But this particularly is relevant in case of electronic goods. After the electronic goods are sold to the customer, customers should not be left on their own. The maintenance of these electronic goods or after-sales support that has to be provided in terms of configuration, setting up of the machines, in terms of timely stock of how the machine is delivering the quality, there is a sort of feedback from the customer. All these things are equally important. So after-sales service also matters when we talk about customer perspective. So some of the lead indicators in case of customer perspective they are highlighted over here. One is on-time delivery. Have we delivered product to the customer on time? We talk about what is the time gap between the time when customer has inquired about the product, placed an order for the product, and when the product was delivered. Right? It is called turnaround time. The time gap between the inquiry date and the delivery date should be reduced as much as possible. This turnaround time should be reduced as much as possible. On-site service. How are we in a position to make the customer feel comfortable at our doorstep when he visits the showroom, when he visits the premises, right, of the warehouse, etc. How does he feel on-site service? Do we give him feel-good effect to the customer? That also matters, and that is why we have feedback. We have the customer satisfaction survey that is conducted. The customer is supposed to fill up the form, nowadays online form. There and there itself, how was his satisfaction level when he visited the showroom, when he visited the shop or a departmental store. So it's on-site service. After-sales support, which I mentioned to you about maintenance, about configuration, the feedback about satisfactory functioning of the machine, etc. or the product. Defects per order. What is the rate of defects? Right? If the customer gets certain percentage of total output, total production, total quantity received as part of defects, then that is not good. Right? The defects should be reduced with every next order. In fact, it should be zero defect delivery that should take place. When we talk about supplying the product, it should be of at most 100% error-free product, and its delivery that should take place. So how many defects per order? Is customer required to return the consignment in part or in total? So sales returns, always we measure sales return. What is the quantum of sales return, and whether same customer is returning the product again and again, or almost all types of customers from different regions are returning. What is the total quantum of sales return? And that depends on defects per order. Cost of the product, of course, he should feel that yes, the product is competitive in terms of cost. When he looks at the other competitors, the product which is offered to him by the organization should be, of course, reasonable in price. So cost of the product, free shipments, etc. Some incentives provided to him in terms of, some offers, some discounts, some free shipments, deliveries, etc. So these are the expectations of the customer when he purchases product from the market. So delivering a quality product as per customer's demand, that is certainly important, but we always need to maintain customer satisfaction, customer retention, acquisition and loyalty. See, these are the four words which are highlighted. Customer satisfaction, that is wow effect, VOW, wow effect. Customer retention, एक बार जो customer मेरे पास आ गया, I should be able to retain that customer forever. Acquisition of new customers, try to tap new markets, try to tap new customers. So building your brand image in the market and getting new customers, and of course customer loyalty. That means once the customer retention and customer loyalty. I have so much faith in my product quality, in the delivery of the product, the after sales service, that I am 100% sure that the same customer will visit my premises, will buy my product again and again. So that is a kind of confidence. So when organization looks at its performance, it should take into account the customer perspective as well. So to revise once again, customer perspective will include quality product, quality supply of goods and services, effective delivery, that is also important, market share in terms of how many customers, to what extent we are able to spread across in different markets, different territories, customer loyalty, customer retention, customer satisfaction, and customer acquisition. So whenever we evaluate the profitability of the organization is important, but customer's profitability evaluation is equally important. Is customer happy about his expectations when he buys product or service from the company? So evaluation of customer profitability is very important, and in all these sense I use the word customer delight. Right? So this is customer perspective, which is very, very essential, very important, integral part of balanced scorecard. We go to the third parameter, and that is internal business perspective. According to Kaplan and Norton, internal business perspective talks about at what we must excel. At what must we excel? That means every organization has its strengths and weaknesses. Every organization carries out a SWOT analysis of its strengths, weaknesses, various opportunities, and also the challenges, that is threats. So looking at your core competency, looking at your strengths, are you able to optimize? Are you able to capitalize on the resources which are available, and also the internal processes which you have in your organization? There are certain processes wherein I am very good at. That means this organization is having its name in the market in terms of its process, that is quality production. That is, the hygiene products are produced. If that is the process, that is the internal quality of the production, then obviously that is a strength. But there are certain areas of improvement, what we call weaknesses. So how can we improve upon in our areas of weaknesses so that weaknesses also get converted into strength? So when we look at internal business perspectives, at this stage, the organization will carry out a SWOT analysis and will look at how the customer is satisfied by providing him quality product and service, of course, by improving our internal business processes. Now that is something internal which is meant for organization and its management. So it's something called self-introspection. If management wants to improve after-sales service to satisfy the customer requirements, obviously to achieve this objective, you have to provide some support to the customer in terms of toll-free customer helplines. So you should be in a position to provide toll-free customer helplines to the customer, so you can call up anytime and get the response for any complaints or any problem which the customer is facing. Setting up service centers in all major cities, so customer doesn't have to travel from one location to other to fetch that particular product or the spare parts or the accessories. So setting up the service centers in all major cities, these are the areas in which probably right now or at present organization is lacking. So these are the areas in which organization can work on and improve on. So what we must do to improve our business processes, Right? This is something called self-introspection or investigation into your own processes. And Kaplan and Norton have given a lot of importance to these business processes. They say that these key processes are monitored to ensure that outcomes will be satisfactory. At every juncture, at every stage, these key processes have to be monitored to ensure that the final outcome is satisfactory. Now, when we talk about internal processes, there are three types of processes. They are not given over here, but they are discussed by Kaplan and Norton. So I will just share this over here. We are on the topic balanced scorecard. All of you are in a position to look at the screen, the Word document where we are on the topic balanced scorecard. We are on the topic internal business perspective. So when we talk about internal business perspective, Kaplan and Norton talked about improvement in three types of processes. One is innovation process. Now this is something you can take down because it is not a part of our slide. It is not a part of the module which is circulated. Innovation process. Right? Yes. Okay, I will share. Now it is visible. Huh? Yes, yeah. We are talking about balanced scorecard. So balanced scorecard, first two perspectives, all of you are clear. One is financial perspective, second one is customer perspective. Now we are looking at, in balanced scorecard, we are looking at internal business perspective. Now when we talk about internal business perspective, there are three types of processes which Kaplan and Norton talked about. One is innovation process, second one is operational process. This you can take down because it is not a part of your module. It is not given in the module. Operational process, and third one is post-service sales process. I will explain one by one. Post-service sales process. All three are part of internal business perspective. So in balanced scorecard, we are talking about internal business perspective. That is doing a SWOT analysis of strengths, weaknesses, opportunities and challenges. Looking at the core competencies, looking at the processes in which organization is already good at. It is excellent in certain processes. But there are certain processes which need introspection, certain processes which need improvement, and therefore another relook has to be given. So when we talk about improving the internal processes of business, there are three types of processes we are talking about. One is innovation process for exploring the needs of the customer. Gone are those days when organizations used to have a rigid approach saying that this is the product we are manufacturing and customer will have to adjust according to the product which we manufacture to suit their requirement. Gone are those days, I said. Now customers always demand the type of product, the type of service, what they are looking at, what they are expecting. So organization has to adapt, ADAPT. Organization has to adapt according to the requirements of the customer, suiting the customer needs, and therefore continuous innovation, exploring the new requirements of the customers and catering to those needs, right, by adapting yourself is the need of an hour. I think all of you are through with this innovation process. You understood it is innovation in the way in which we manufacture, innovation in terms of product design, certain additional features, additional characteristics of the product I can build in by designing the product which were not there so far, but now these are the requirements. At one point of time when Nokia came out with handset, that was the only requirement that yes, one should be in a position to talk on the mobile phone. That's all. Nobody thought of any innovation. It is just replacement of our or a substitute for our landline phones. We have Nokia handsets. That's all. But now we have a lot of requirements from the customer. A smartphone has become customer's device, which is multi-purpose device and which can be used for various needs. Multitasking, an individual or any person who is working from home nowadays during lockdown time is doing multitasking from his smartphone. All of you are listening to these lectures. You all are simultaneously working. Those who are doing articleship are also working on the office files simultaneously, or maybe eventually over a period of time. In that case, you require multiple features in the smartphone, and you are not just happy with calling and receiving the messages or receiving the calls. So there has been a lot of innovation, and you have seen the high-end products that are manufactured now, including the process softwares which we have undergone change. So this is the best example of innovation process. We look at the operational processes also. That means we want to provide efficient, consistent and timely delivery of products and services. This is operational process. Having started manufacturing the product, having started delivering the product, how efficient are we in supplying these products on a timely basis, regular basis, efficiently and consistently to our customers. So that is operational processes. When we talk about internal business perspective, a predominant portion is relating to operational processes only, improvement in operational processes. And there comes into picture Six Sigma, alignment of processes, what we call process mapping. All of you would have heard this word process mapping. Process mapping. Mapping with what? Mapping with final outcome. Ultimately, the processes should be designed, they should be synchronized so well, they should be designed in such a manner that all these processes result in tangible outcome. What management is looking at. Management has desired some tangible outcome out of every process. So if any process is not yielding that outcome, then why do we have that process in our value chain? You have already studied the concept of value chain analysis. That in value chain, we look at what are the processes which do not add value to the customer. If certain processes add value to the customer, we continue with those processes. But if certain processes do not add value to the customer, then we do away with those processes. That is what is value chain analysis. So that is what is operational process excellence we are looking at. Excellence in all these areas. So when we talk about internal business perspective, I am tempted to write one more word, and that is excellence. A customer looks at excellence in terms of innovative processes, new ideas to be incorporated in our product design, in process design, so that we cater to the changing needs of the customers. That is most important. I cannot have rigid approach. Operational processes, that is day-to-day processes, have to be streamlined or aligned for the overall effect and for converting the processes finally into tangible outcomes as desired by the management. And last is post-service sales processes. Just now I mentioned to you about after-sales service, post-service sales processes. So are you fast in catering to resolving the customer's complaints? Customer has purchased a product or has availed the service, but for whatever reason, customer is not happy with the service, quality of service, and customer is again facing some or the other problem. So if customer gets back to you with his queries, are you fast, are you quick or swift in responding to his queries immediately? Again, talking about the turnaround time. So if you are not good in that area, probably it's high time that you improve upon your internal business processes in terms of after sales response time to the customer. And that is equally important. All three things only will bring wow effect for the customer. So that is about internal business perspective. Any doubts you have, you can ask me in the link that is provided to you. We have completed 3 perspectives in balanced scorecard. One, financial perspective. Second one, customer perspective. Third one, internal business perspective. Coming back to the 4th perspective, and that is learning and growth perspective. Now this is again the need of an hour. You cannot have a static approach in the organization where employees who have been appointed at one point of time continue years after years without any development, without any training. That cannot happen. Training or learning is a continual process in any organization. So learning and growth perspective answers the question, how do we continue to improve and create value? how do we continue to improve and create value for the customer. Everything is customer centric, customer focused, as you can see. So when we are improving our business processes, we are looking at wow effect for the customer. Similarly, when we look at learning and growth perspective, we are looking at how we can continue improving and creating value for the customers. Now, it is a long-term perspective. Learning and growth is a long-term perspective. And obviously, organization is concerned with building the long-term growth. And there are 3 points which emerge out of learning and growth perspective. 3 principles, sources they call it. One is people, that is employee capabilities. There are so many occasions when the employee has to take higher responsibility. Right? Originally, that particular manager was appointed for a particular task, for a particular function. But over the years, the manager has to be groomed. Over the years, the manager has to be equipped with other skill sets as well. So he becomes capable of handling higher responsibilities. Manager becomes capable of handling higher responsibilities. Manager can take extra load, extra responsibility and meet the expectations of the top management. So are our employees geared up? Are our employees geared up? Have they been trained? Have they been groomed well in the organization? So that is in terms of learning and growth perspective. In organization, is there a training culture? Some organizations don't want to spend any amount on training, right? They say that yes, let employee learn on his own. When you are already working on the job, let employee pick up from the mistake he makes. Why specific training is required? Why skill-based training is required? But that is not a correct approach. There are organizations which spend huge amount on training. In fact, many large size companies have blue chip. Most of the blue chip companies have a separate budget for training their employees. And it's a training calendar which is rolled out at the beginning of the year. The employees, when performance, they undergo performance evaluation or performance review at the year end. At that time, their training needs are assessed. I have faced this in the organization where I was working. At the year end, at the completion of the financial year March, in the month of April, there is a performance review which is carried out by the immediate supervisor. One of the columns in the performance review column is what are the training needs of the employee. And in that, the employee is made to speak on what are the areas in which employee needs training. So I remember it was, of course, 15 to 18 years back when that time advanced features in Excel were getting developed. So I remember at that time I had mentioned to my boss that I would like to get training. I would like to get trained in advanced Excel features like macros, like VLOOKUP, sorting of data, etc. Now this has become the need of an hour. In today's time, these are not the new things. These are expected by every employee. If you are working in finance specialization or in finance domain, you are supposed to have command over Excel and advanced features of Excel. You must have that awareness and a thorough knowledge of Excel. But I'm talking about 15 to 18 years back in the organization when Excel had just started peaking up. At that time, many of us in finance domain had expressed that we would like to get special training in advanced features in Excel. And immediately the boss agreed to our request and we all finance colleagues were given specialized training in advanced Excel features. So the objective of assessing the training needs of individual employees is to train them right from the future perspective, future growth perspective. Had we not learned Excel at that time, had we not acquired command over Excel at that time, it would have been very difficult for us to survive or to sustain now in today's time. So whenever the employees are trained, the objective is long-term perspective and that has to be kept in mind. So people or employee capabilities, I think all of you have understood this. If you have any question on any of these parameters, you are free to ask. Right? So learning and growth perspective talks about developing people, developing the employees in terms of skill sets so that they can take additional responsibilities, higher responsibilities over a period of time. They can be groomed well. Then we talk about systems. When we talk about systems, it is information system. That means is our IT system geared up? We talk about technology leadership. Are we growth leaders in terms of technology? That means is this organization adapting itself to the new technology? There were, again giving an example over here, there were occasions when companies used to work on a standalone basis. Again, few years back, 15 to 18 years back, we never used to have ERP, it used to be a separate accounting software, accounting package called Tally. We used to always work on Tally, which was a standalone software or standalone package for all our accounting requirements. Then there was an adaptation to Tally ERP, and now we have ERP, various softwares which are available on ERP mode, and we talk about SAP now, SAP, right? Where all the integrated requirements, integrated business requirements are taken care of. So it's a system software which takes into account all the functional areas and ropes in a sort of integrated MIS, that is monthly or management information system, MIS, management information system. So is MIS system robust in any organization to collect the data and spread that data in the form of information to all the managers across different functions. So it is information that is provided, quality of information system, and the information that is provided to managerial positions for decision making. If right information is available at the right time and in the right format, proper decision can be taken by the top management. So when we talk about learning and growth perspective, continuously adapting ourselves to the new technology, incorporating new technology, and having this philosophy of technology leadership, that is most important. And last is, here we also talk about infrastructure. The organization should have proper infrastructure in place in terms of hardware support also. So you should have a dedicated budget, right? A capital expenditure budget for IT function separately, and that is what is infrastructure support. Organization procedures again we talk about motivation, empowerment, and alignment. That means all the tasks or functional areas are aligned with one another in such a way that there is a smooth flow of information from one level to the other. Employees are motivated highly, so there are employee benefits which are given to the employees. There are incentive schemes in the organization, Kaizens which are given. All of you have studied Kaizen, right, where suggestions given by the employees are duly recognized, rewarded if they are implemented. Then there is empowerment of employees. There is delegation of decision-making power. So involvement of everyone, a holistic approach, that is organizational procedure. So when we talk about learning and growth perspective, we look at people, systems, and organizational procedures, right? So that's all. These are non-financial measures. So when we talk about balanced scorecard, obviously it looks at all four perspectives, and all four perspectives are very important. That is financial perspective, customer perspective, internal business perspective, and learning and growth perspective, mainly to bring the overall success and reach the critical success factors, achieve the critical success factors. Critical success factors talk about what? So now these success factors have to be translated into reality, right? So how we have learned, we look at the diagrammatic understanding of this balanced scorecard. It will give a consolidated picture of how the balanced scorecard looks like. This is the balanced scorecard. All of you can see this. In between there is a vision. In between there is a vision and a strategy. Right? In order to achieve the vision, management should have strategy in its place. And when we look at the overall success for the organization, it is not only financial perspective, I repeat, not only financial perspective, but also other three non-financial performance measures. Other three non-financial performance measures. So financial performance measures talk about succeed financially in terms of numbers, in terms of figures. So how we should appear to our shareholders. How we should appear to our shareholders. Next, customer perspective. To achieve our vision, how? It talks about how should we appear to our customers. What customers expect from us and how do we deliver to our customers. That is customer perspective. Third one is internal business perspective. To satisfy our shareholders and customers, both, right? What business processes must we excel at? And if we are lacking in certain areas, then how we can improvise our performance in those areas. And last is learning and growth. That is Again, to achieve our vision, how will we sustain our ability to change and improve? I use the word adaptation. Organization should be always receptive to change. Organization should always be receptive to change. It should adapt itself to the changes. Changes in terms of learning requirements for the employees, in terms of technology development, infrastructure development, process development, so on and so forth. So continuous improvement, continuously changing and adapting. Change is the only thing which is constant. It is always said change is the only thing which is constant. We should continuously keep on changing, adapting ourselves. That is for long-term learning and growth strategy. And each of these perspectives is divided into 4 parts. You have seen under every box there are 4 grids. Rather, one is objective. So when we look at internal business processes, obviously management is supposed to write down or list down various processes, and these processes have to be mapped or have to be measured in terms of what are the objectives of the organization with respect to that process. What are the objectives? Final objective is to improve satisfaction to the customer. That is the final objective. The measures, what measures you are planning to take for improving in internal business processes, changing yourself to the customer's expectation, right? Providing after sales service to the customer, innovative products to the customer, right? So on and so forth. So the measures, what are the targets which are set? These targets are laid down or set in terms of customers' expectations. So once again, under every perspective, there are targets which are laid down. And in order to achieve these targets, somewhere you have to start the reforms. You have to take the initiative. So what are the new measures, new initiatives, new reforms, right? Or implementation plans which management has started putting into practice so that these objectives and targets are achieved. Objectives are certainly in broad terms, but targets are quantifiable measures. All of you understand the difference. When we look at targets, sales targets, cost targets, these are quantifiable parameters. Objectives we talk in terms of broad framework, right, in order to achieve the vision, overall vision of the organization. So vision and strategy has to be mapped. Everything has to be mapped with corporate vision, which is very important. We discussed this in Monday's class also, that departmental managers or divisional managers cannot take the decisions in isolation. They have to look at the overall expectations of the management and company as a whole, goal congruence. So every strategy which you adopt in the department or in the division should be mapped with corporate vision. That is the final summary or outcome of this particular diagram. So vision and strategy moving to 4 directions, 4 perspectives. By the way, the question may arise, is this followed in the organization? Kaplan and Norton were far ahead of times, and they had envisaged that this particular model will go a long way in successful implementation of various strategies, in the organization. That is what Kaplan and Norton had forecasted. And there are companies which started and which are successful in implementation of these balanced scorecards. They do their measurement of targets, actual achievement of performance vis-a-vis targets, vis-a-vis the benchmark practices, and thereby they look at their scores. And in your module, they have given one interesting example, a case study sort of, where the strategy mapping, they have given here the strategy mapping. I covered this point, mapping of the strategy, overall organizational value. I'll show you the example which is given in the module in terms of measurement of the actual performance by Quanta Service Limited. You can see balanced scorecard in practice. That is the title, balanced scorecard in practice. For 2015-16, of course, it's an old story, but yes, now by this time, most of the companies have at least started attempting to score or to measure the actual performance against the targets or against the benchmarks which have been laid down at the beginning. So various objectives management had laid down. You can see group profitability, that is group profitability has to improve, PBT has to improve, then transformation and cost agenda, delivering the transformation benefits, right, that is to the customer. Unit cost should be, per unit cost of the product should be reduced. Then people and operational safety, right? Most important when it's we are talking about quanta surveys. So airlines, service industry should look at the safety measures of the operational safety of the people who are traveling, and that is the passengers and the customer, overall satisfaction level of the customer, and net promoter score, punctuality. Are flights taking off on time? Is there any delay in takeoff or delay in landing? Is it beyond control of management, etc., etc.? So management had charted out or listed down various objectives, and against those objectives, what are the measures management has taken? So exactly on those four grids: objectives, measures, targets, and outcomes. These are the four words which I used in balanced scorecard. Each perspective has to be weighed, W-E-I-G-H-E-D. Each perspective has to be further broken into four things. One is objectives, measures, target, and tangible outcome, actual outcome. It is the actual outcome which you are going to measure against the target, and there are so many comments which are given over here that whether management is able to achieve. When you are studying for the exam at that time, just read through this case. We don't have so much time to go into the detailed point by point analysis of the case, but you can make out that most of these points are highlighted in green, in violet, and dark violet. Only some are highlighted in faint violet. So that color demarcation is based on what is the extent of achievement of the targets. If it is dark purple, when above target achievement against the targets, what you have achieved above target. Full achievement is slightly pale, and totally pale is no achievement against the target. So the color shade goes on becoming pale as there is no achievement. But you will find the achievement in case of this quanta surveys is 160%, they said. Yeah? And that is 100% balanced scorecard is followed. The expectations are met. The outcome is 100%, but their actual achievement is much more than what was planned. Now these are certain things which are questionable, which are debatable. One can say how this matrix is drawn. Now again, a system software is used to look at the matrix. This matrix is not generated based on anyone's intuition or anyone's guesswork that chalo 50% likhte hai, 20% likhte hai, not like that. The range of outcome is based on the actual survey, actual performance in last 1 year, and these figures are arrived at. Just for simplicity or for convenience, they have given it in round of 50% achievement, 20% achievement, and so on. That means target you have achieved completely 100% achievement of the target. Read this case for better understanding, point by point analysis. This is balanced scorecard in practice. In academic sense, this topic again occupies a great importance. You find a case study in the exam which involves application of balanced scorecard, right? Where four perspectives have to be discussed. So in a given scenario, this paper is case study based paper. So in this topic, you always have some or the other question, very important topic from the exam point of view, some or the other case relating to balanced scorecard, where the performance of the organization is not at the expected level. Organization is going through a turbulent time, and there is an advisor who is appointed, a management advisor who is appointed to look into the areas of weaknesses for the organization, and he is expected to suggest a roadmap, a framework. This is a typical question which generally appears in the case study, that the management accountant or the management consultant is expected to draw a broad framework, is expected to draw a sort of an approach road. This is the word which is used, approach road, or a broad framework for the organization to bring this organization out of red. Out of red is out of bad patch, out of loss situation. Organization should be in a position to make consistent profits year after years, and therefore this management consultant is appointed. So balanced scorecard will look at or it could be the other way. It is an organization which is already established, already set up, but still in terms of customer response, customer satisfaction, it is not getting good scores. It is not getting good scores. And to that extent, the overall scorecard is affected. So when we talk about balanced scorecard, obviously it is the holistic approach or the overall approach, comprehensive approach, which is taken into account, whereby the organization's success is measured. The success of the organization is measured in terms of its attitude, its approach towards all these four parameters: financial, in business process, customer perspective, business processes, and learning and growth perspective. All four are equally important, and no major performance measure can be compromised but for the other. All performance measures have to be given due respect, due weightage in the matrix which is developed by the management consultant. Right? There are many research scholars who have done their PhD in this topic, in balanced scorecard. So this topic is a contemporary topic, you can say, an upcoming or emerging area in strategic cost management and performance evaluation, because it has got relevance from the point of view of academics as well. Right? I have some of my friends who have done their PhD, detailed research in balanced scorecard by doing an empirical research, empirical survey of number of companies based on their data, how these companies are successful, right, over a period of time, and what is the track record they have maintained over the years, not only in terms of financial perspective, but also in terms of customer perspective, internal process perspective, that is internal business process perspective, and also learning and growth perspective. I think we had elaborate discussion on this. Obviously, I spent so much of time because, yes, this topic occupies, once again I say, an important, a great weightage in our examination, mainly to assess the capacity of the students to apply these perspectives in a given case. That is what is tested. And therefore, you can come out with a lot of innovative ideas, innovative strategies, which, because you are the management consultant for this company. And therefore, you can come out with innovative strategies whereby you can improve the performance and make this organization excellent in all spheres. Inverted comma, I put it, excellent in all the spheres. And therefore, balanced scorecard is looking at reaching the excellence. If you look at the vision of some of the companies and the objectives, they mention very clearly, in order to achieve or when we are pursuing, in pursuit of our overall vision, we want to achieve excellence in our processes. In order to achieve the overall vision, we want to achieve excellence in our processes. So overall excellence in business processes is important to achieve the final goals. This diagram also gives you an overview of maximizing organizational value. It is a completed generic strategy mapping. I repeat again, every strategy which you suggest for growth of the organization, right, should be linked, should be mapped, right, up to the down level. That means every functional area should be in a position to accept that strategy. That acceptance level in the organization has to be very high. Alright, the negative part or the flip side of the balanced scorecard. So is this chart clear to all of you? If there are any questions in this chart, you can ask. But 4 things here to remember. You are required to plot, P-L-O-T. You are required to plot all your strategies or all your thought processes over these 4 points: objectives, measures, targets, and initiatives. Objectives, measures, targets, and initiatives. Look at the flip side or the negative side of this balanced scorecard. Everything is not goody-goody. There are always some practical difficulties in implementation of balanced scorecard. So what are those practical difficulties in implementation of balanced scorecard, or what are the drawbacks of balanced scorecard? Following are some of the reasons why balanced scorecards sometimes fail to provide for the desired results. They are very self-explanatory, and therefore you can understand very well. Managers mistakenly think that since they already use non-financial measures, they already have a balanced scorecard. Tell me which organization today doesn't have other non-financial measures of performance. Every organization today uses non-financial performance measure. Every organization caters to customer needs. Look at the overall improvement in the processes. Look at learnings and growth. So हम लोग already सब कुछ तो follow कर रहे हैं. We are following all the non-financial measures in our organization. So what is this matrix? What is this new grid concept that is Captain Norton has given? Why do I need to follow meticulously or separately in the name of balance scorecard? So there may be resistance to change. There may be reluctance to change. Resistance and reluctance is something which is there within a manager, within an employee, and that can be changed, or that can certainly be overcome by making him aware of the importance of balanced scorecard and how the things can be quantified. So managers mistakenly think that they already use non-financial measures and that means they have a balanced scorecard. No, these two things are not one and the same. I'm not saying they are different, but they are not one and the same. That means using non-financial measures in isolation, by these are something like sprinklers. You are using non-financial measures in the organization, but you don't have a systematic approach towards it. When you have a systematic approach towards non-financial measures, in terms of quantifying these measures and mapping it with the strategy, mapping it with the overall vision, right? Strategy mapped with vision is the three-way process: measures or strategies, action plan mapped with vision. If that happens, and in terms of quantifiable targets, quantifiable results and achievement of results against targets, then we say we have implemented balanced scorecard in the organization, because finally you are giving the score. Here I am reminded of a balanced scorecard. I forgot to mention one point. I am reminded of a student who gets the prize called best student in terms of overall conduct. You remember at the school level or even in colleges also, still students are awarded based on their overall conduct, right? Generally on the Independence Day or the Republic Day or at the end of the academic year, the student who had his performance during the year in all spheres is given a title, right? The best student of the year, right? Now this best student is measured in what way, in what sense? It is not only in terms of academic performance. That student may have excellent CGPA. CGPA is cumulative grade point average. Student may have an excellent CGPA in terms of his academic performance. He is excellent in academics, right? His scores are very good. But he is not good at interacting with people, interacting with other students, the professors, the teachers. He doesn't respect the teachers. Then obviously such student is not going to get a reward or a prize for good conduct. When we talk about best student of the year, it measures his performance on the basis of A, his academic scorecard, that is academic excellence. Number two, in terms of his interaction with other people in the organization, in this case other people in the school or college, that is other colleagues, other friends and teachers, and also non-teaching staff in the college or in the school. Also we look at helping out the teachers or helping out other weak students of the class, right? Going out of the way and helping out, right, when there is requirement. These are the qualities of a good student. So obviously when out of hundreds of students, some student is picked up for his best conduct during the year, all these parameters or performance measures are looked at. I think all of you are matured enough to understand this, and therefore will appreciate what I am talking. Similarly, no organization is considered as 100% successful unless it targets, unless it reaches that target level in terms of customer satisfaction, internal business process improvement, and learning and growth perspective. So these three financial measures are important. But in this process, there are difficulties like this. First difficulty is managers mistakenly think that they use non-financial measures when they already have a balanced scorecard. Secondly, senior executives misguidedly delegate the responsibility of the scorecard implementation to middle level managers. They look at a compliance. This is again the tendency or an attitude, problem of attitude. Middle level managers को दे दिया, उनके ऊपर सौंप दिया, so they will do the job. By the way, balanced scorecard is a philosophy which has to be accepted at the top level, and then it should percolate to the down level. There cannot be delegation of responsibility of preparing the balanced scorecard, the matrix, the grid to the middle level managers. The philosophy should originate from the top level and then percolate to the middle level managers. But some organization, it doesn't happen. Complete delegation takes place. That's not fair. That's not a fair approach. Companies try to copy the measures and strategies used by the best companies rather than developing their own measures suited for the environment under which they function. This is another drawback. Each organization operates under different environment, under different situation, and therefore you can look at the strategies adopted by other organizations. You can do the benchmarking. All of you know the benchmarking practices. That is looking at the business practices or business models adopted by the competitors, and that strategy called competitive strategy we also adopt in our business. That is called replicating the model. Replicate, English word replicate. Replicate means repeat the business model. दूसरा business successful हो रहा है, the other business is very successful. So what are the success stories? What are the factors responsible for success of that business? Let me study their success pattern. Let me study their strategies and adapt myself and adopt the same strategies in my organization, right? In this process, what may happen is the strategies which are used by the competitors may be adopted blindly without adapting, without modifying those strategies, suiting this business, suiting your own business requirements. That is the flaw in implementation of balanced scorecard, that just copy-paste approach will not help. This is called copy-paste approach. किसी का copy करके I try to fit it in my organization structure. It cannot work. It will not work successfully. You have to have some adaptation, some modification suiting your requirements. And last drawback or last difficulty in implementation of balanced scorecard, there are times when BSc is thought to be meant for reporting purpose only. That is mainly for compliance, mainly for MIS. Top management ने कुछ मांगा है, so let me prepare quickly and produce to them. If that is going to be the approach, it will defeat the purpose of balanced scorecard. It should be from within the philosophy. That's why I'm again and again using the word philosophy of the organization. Top level should be to implement the balanced scorecard for the overall success of the organization, and that too from the long-term perspective point of view. So keep this in mind. Balanced scorecard is for long-term purpose. And though it's an investment made for the time being, but it is for the long-term purpose. There are organizations which do not think of this balanced scorecard from that angle, from that perspective. They look at BSc only as a reporting mechanism, only for compliance purpose. And if this kind of thought process or this kind of approach, then that is certainly that will defeat the purpose of balanced scorecard. All right, friends, we take a small pause over here before we go to the next qualitative measure. Any questions on balanced scorecard, you can ask me. Study this balanced scorecard in practice. There is next qualitative technique, performance evaluation measure, and that is performance pyramid. All of you understand pyramid. This concept was developed by Cross and Lynch in 1991. So these are theoretical models, no doubt about it, but they are used in practice, right? They are adapted, rather modified by the organization suiting their requirements. So time and again, I'm emphasizing one is not required to follow any of these models, any of these concepts or theories as it is. You are supposed to modify these principles or practices suiting your business needs. Right? Somewhere that viewpoint has to be expressed in your answer. Students, please understand, you cannot directly say that this is what is mentioned in the balanced scorecard or performance pyramid and therefore it should be followed. No, nothing like that. Right? These are the broad guidelines. It's a broad framework that has been designed. But you can adapt yourself suiting your requirements to changing requirements of your business, and you can bring little change, modification in these concepts or in these theories in your own business. So let there be a disclaimer at the end of the answer, towards the end, that management should of course adapt itself to the changing requirements of business, to put this concept or theory into practice. So let us look at performance pyramid. This concept was given by Cross and Lynch in 1991. Right, and as the name indicates, it is a pyramid. So for pyramid, you understand the base has to be very broad. The foundation of the building has to be very strong. Then only the entire structure of the building, the entire all the pillars, rather the horizon, what we build up over the years, right, and multi-storied building, housing complex will depend upon the strong pillars, will depend upon the strong foundation. To build a strong house, one must have a strong foundation, and then only the structures will be built in. Look at this diagram. It is self-explanatory performance pyramid diagram. The pyramid typically looks like this. It is broad at the bottom, and it's like a triangle, narrow at the top and broad at the bottom. Why narrow at the top? Because at the top there is a corporate vision. Vision has to be clearly defined at the beginning of the business, and top management, it starts with top management. So vision leads to, of course, objectives, setting up targets, so on and so forth. So you can see this arrow, that vision certainly translates into objectives, quantifiable objectives, measures which are quantifiable and non-quantifiable. The left-hand side of the pyramid talks about non-financial performance measures, and right-hand side talks about financial performance measures. So if you further go down, non-financial performance measures, same concept, balance scorecard में जो दिया था, non-financial performance measures talk about improving the market share, catering to the customer needs and customer satisfaction, providing quality product, sell service, effective delivery, speedy delivery on a consistent basis. So entire LHS left hand side is non-financial performance measure, and right hand side is financial performance measure, which talks about productivity, efficiency in output, cycle time, turnaround time, how fast you cater to the customer's request, the recycling of waste, percentage of returns. Wherever quantification is possible, that means it is a financial performance measure. Right? And various workstations, work centers, departments, divisions, operating systems. So you have all the business units which are supposed to be on the side, on the side or on the lines of this pyramid, which are supposed to work towards achievement of both financial as well as non-financial performance measures. And that is what is the job of operations. We say the top management, then it goes down to we have at a strategic level, then tactical level, and at the operational level. You studied this in strategic management. At a strategy level, when the vision, mission, objectives, targets are decided, and the broad guidelines are framed, and execution and implementation of those guidelines, that is done by the operations team, and therefore operations team is at the bottom. Operations team has to be very strong enough, that is the foundation, that has to be strong enough, because that will certainly reflect your internal efficiency and external effectiveness. Friends, remember these two words, internal efficiency and external effectiveness. Efficiency and effectiveness later on in the Prism, performance Prism, again we will look at this again in the block model also. There is and even in non-profit organizations, when we have performance measures in NGO or non-profit organizations, again efficiency, effectiveness matters, right? So we have efficiency in terms of the speed at which we cater to customers' requirements, the quality of the product, etc. And the effectiveness is the final outcome. That is, are they finally happy? Was my delivery effective? That is applicable to us also in any profession. When we are into service profession like teaching, for example, right, are we efficient in our teaching? Are we giving quality education to our students? And that too, what is relevant for their subject, what is relevant for their exam. So efficiency in teaching, right? And when we talk about effectiveness, the overall impact at the end of the session, was there any growth in the learning curve? All of you have studied learning curve in strategic cost management itself. Right? Each student is growing on the learning curve from 20% to 25, 25 to 50, 50 to 80, and so on with every progressive session. So that is effectiveness. So effectiveness is of course tangible. It can be measured in terms of tangible outcomes. And internal efficiency is the process, the way in which you cater to the customer in terms of reaching the final outcome. So ultimately, it is the operations team which is at the bottom, which is responsible for bringing that wow effect for the customer and bringing the final goals or vision of the top management in reality. The final vision or final goals of the top management will come into reality only based on the successful support, the implementation of those strategies by the operations team, successful implementation of those strategies by the operations team. In that sense, the support is very important. This is the operations role or contribution, what they provide for the growth of the organization. This diagram is explained below. You have objectives which are shown from top to bottom, and therefore on the top there are objectives, at the bottom there are measures. Measures are initiatives which are taken and implementation of those strategies. So measures are from bottom to top. So no organization can now afford to have a top-bottom approach where directions are given to the bottom level and implementation is done by the down level. No, we have involvement of the operating managers also in the decision-making process. So it is bottom-up approach which is used in most of the organization. Operations team plays a very important role. At the top is organization's corporate vision, to which long-term success and competitive advantage are described. Business level focuses on achievement of these CSF, critical success factors, in terms of market measures and financial measures. Right? Market is non-financial, financial measures are separate. Marketing and financial success of proposal is the initial focus for achievement of corporate vision. Above businesses are linked to customer satisfaction, flexibility, and higher productivity. Are all we have discussed. So left-hand side of the pyramid contains external forces which are non-financial. So when we talk about effectiveness, that is external effectiveness. Aapko session kaise laga? How was that effect at the end of the session in terms of satisfaction level, catering to the requirements, and also meeting the expectations, right, in terms of achieving the final goal of comfort level in the exam. So that is something which is external, non-financial, right? External forces, or that is called effectiveness. And right-hand side of the pyramid is internal efficiency, which is predominantly, I said efficiency is predominantly financial in nature. So there is again one example. For every model, some example is given. You at your free time, you can always read this case study again or an example. But here, just to bring in crux, I'll not read out in detail, but just to bring in crux, there was management consultant who was appointed to look into the projections or proposal made by the company. And company is the client of this consultancy organization, LLP. This company has made its projections or new proposals for 3 years, and based on internal efficiency and external effectiveness, the consultant is supposed to comment on what are the areas of improvement which probably will help the organization in achieve the overall goals or meet the vision of the top management. This financial data you can see first 4 parameters: production achieving design quality standards. Production achieving design quality standards. You should design your production in such a way that yes, it meets the benchmark of quality. What is your comfort? In 2017, it is expected that 95.5%, these are all projections by the way, which are made by the company, that the company is giving these projections, this financial data to the management consultant, and management consultant analyze, carry out a detailed research and give his report to the top management of the company, whether they are on right track and whether this business will succeed, right? Whether these projections are fair, right? Whether they look in the overall interest of the organization. So production achieving design quality standards are expected to increase from 95% to 98 and 98.5%. That means with every passage of every year, our quality standards, our production quality standards certainly will meet the expectation of the customers. Returns from customer as a percentage of delivery. 2017, 2% of the sales return, 1% sales return and 0.5% sales return. I mentioned to you, customers should not have any problem in the product quality. Number of defects per order should get reduced. So sales return should reduce. Cost of after sales service should reduce. There should be inbuilt controls in your processes in such a way that automatically a customer is catered to when he escalates his complaint, right? And he logs in and says that he has a complaint with this product in these features. Right? Immediately that complaint is catered to. So cost of after sales service reduces from 1.3 lakhs to 1.1 lakh and 1 lakh over the years. So all these projections look very promising. What you say? These projections look very promising. Even sales meeting plant delivery dates are 85, 90% and 95%. The turnaround time, right, from the time the customer has logged in his inquiry, logged in his order, right from that time till you cater to his request, right, there should be minimum turnaround time. And that means his delivery date has to be achieved. 95% is the achievement. 95% of the target dates are achieved. That's a good sign. So looking at these 4 parameters, you can see, or the parameters are nothing but performance measures. Talking in terms of our performance evaluation language, these are performance measures. So these performance measures show an encouraging trend and encouraging growth of this organization. These are certainly we talk about external effectiveness, that is quality and delivery. Quality and delivery, external effectiveness. So quality in terms of those percentages I read out, 95.5% to 98.5% over the years. Cost is reducing from 1.3 to 1 and so on. Returns are reducing from 2% to 0.5%. So quality is expected to improve. Yeah, that is external effectiveness. And delivery efficiency, of course, because from 85% to 95% increase. So delivery efficiency. It is quality and it is delivery efficiency. Both these things you can make out, both comment on external effectiveness. Any doubts you can ask. And internal efficiency, when we talk about last 3 parameters or performance measures which are given, that is average total cycle time from customer inquiry to delivery to drop from 5 weeks to 4 weeks in 2019, drop in the cycle time, right? Average total cycle time from customer inquiry to delivery, right, should drop from 5 weeks in 2017, 4 weeks in 2009. This is also a quantitative measure, but it reflects internal efficiency, cycle time, right, and reprocessing of waste and decreased levels of waste. So idle machine capacity, you can say, is expected to drop from 9% to 1% because that means waste generated is so less that our machines are working to their fullest capacity. In terms of scrap, we say rework, scrap, or your waste has to be reduced from certain percent in 2007. So if you study like this, you will be given some height in the case study or in that particular table or an annexure. And you have to read between the lines. How to analyze a case, you have to read between the lines, interpret the data contained in the case, and then you have to react. You have to read between the lines and you have to comment on, yes, whether this is an encouraging trend or whether the projections look very gloomy. GLOOMY. Projections look very gloomy. Here you can make out that the projections look very promising. So external effectiveness and internal efficiency both are taken care of very well. These are the findings and the analysis of the findings and the report given by the management consultant. So this was the second model, qualitative model, and that is performance pyramid, which talks about broad base at the bottom and then narrow at the top, because vision will be decided by the top management and then it will percolate down to the middle levels managers, operating managers. Operating managers finally will implement and execute the plan in the interest of the customers, in the interest of pursuit of overall excellence or vision of the top management. So you have to discuss a lot in narrative terms or theoretical terms like this when you are analyzing the case. This is again important from exam point of view. It's not just reproducing the numbers which are given in the annexes, but reading between the lines. So far we have covered, just to recap, 3 qualitative models, 3 qualitative performance measures, non-financial performance measures. Number 1 in the last class, triple bottom line. All are related to one another, right? With slight modifications, slight change here and there, slight additions, deletions, but they all talk about non-financial performance measures. One is a triple bottom line. Second one we discussed was balanced scorecard, most important, overall perspectives, right, of the organization. And third one is performance pyramid, right? The fourth one is building block model. Building block model was proposed by, these are all new models which have been developed over last few years and have been used internationally successfully. Particularly this building block model is used in Australia in the regulation of electricity transmission and distribution, gas transmission and distribution. In public utility services where there is transmission, distribution of electricity, gas, railways, postal services, urban water and sewerage service. These are all public utility services. Australia is using this building block model. It's mainly used in 2 types of industries, manufacturing and retail businesses, to evaluate the business performance. And it was developed by Fitzgerald and Moon. See, somewhere you have to remember these authors' names because these models are famous by the author's name. Authors have spent their time and also given the thought process. It's their brainchild. They have brought out these models. As I told you, none of these models we use in theory, which are given in the theory as it is in practice, but we make slight modifications in these models suiting our requirements. So 3 things out of this model. Number 1, Fitzgerald and Moon proposed this building block model. Number 2, it is used in manufacturing and retail businesses to evaluate business performance. But besides that, it also suggests performance measurement problems in service industries. So we have transmission, distribution of public utility services, which is in the process of service, providing service to the individuals, masses. So all types of industries finally can use this building block model. Building block model is well explained with the help of this diagram. So these 3-4 words here to remember, they are very easy for you to remember from exam point of view. Fitzgerald and Moon building block model. Students, just pay attention to these 3 words. One is standards, second one is dimensions, and third one is rewards. I repeat, whatever is highlighted in purple or violet, that is more important. These are 3 areas in which management should work for the overall performance growth of the organization. One is standards, laying down the standards. Dimensions. Dimensions are further divided into 2 parts, results and determinants, right? We have rewards, that is the final outcome, tangible outcome, intangible outcome. So that's there in any function, whether it is a manufacturing sector, service sector, or you have the retail sector. You always have standards which are laid down, standards of quality, standards of delivery, standards of performance, and you have different dimensions in terms of results and also determinants, and you have final outcome, that is rewards, tangible or intangible outcome. Standards, dimensions and rewards. Time and again I am highlighting on the words standards, dimensions and rewards. Let's see how they are further divided. How should standards be laid down? Standards should have proper, fair and equitable base. All standards should be designed. So the diagram extends up to here. It is being mentioned very clearly that these are KPIs. Standards are also called KPIs, key performance indicators. Yesterday we had, in last class we had talked about KPIs, how to achieve. So performance measures should be equally challenging for all parts of business. when we design the performance measures, it should not result in lopsided development. It should have overall development of all the functions within the business. Right? So relaxation given to one part of the business obviously will lead to perception of unfair treatment that will hinder the productivity. So if you are following a particular practice, that practice should be common all across. Standards should be common all across different functions within the business. You cannot have one standard, one set of standards for one functional area and other set of standards for other functional area. That is not a fair approach. So equitable approach, in that sense, the standards of the performance measures should be fair, should be equitable for various functional areas. Then there is ownership concept, where performance measures should be acceptable to everyone. In fact, top management, while designing the standard, while laying down the standards, they will always discuss these standards with the operating managers. For your information, while carrying out performance evaluation, for the next year, the targets are laid down, the standards are set. Now, these standards are set, of course, after having a proper dialogue, proper discussion with the operating managers. So performance measures should always be acceptable to everyone. It should not be, in fact, get a feeling that there is an involvement of everyone in the organization, right? That ownership effect, that I belong to the organization and my views are taken into consideration while laying down the standards. So it is we effect, I effect. You can write such things also. See how you express in polished business English. You are expected to, when you analyze the case and when you write answers to a case, particularly on application of such models, you should express your views in polished business English. Polished business English, when I say, it doesn't mean dramatized English. It is business English, making use of the terms or the jargons which are in isolation by the top management, right? And then only you will have ownership of results. If operating managers are made to accept these standards, then only they will take the responsibility for achievement of those standards. And if you are not taking me into confidence, for example, for laying down the standards, why will I take the responsibility for achieving those standards? These standards are forced on me. So the involvement of employees, the managers, that is ownership approach, is important. And lastly, of course, standards have to be achievable. It should be realistic. It goes without saying. The actual results, for example, using actual results for the competitors should be set as a target. If I just look at the model, which is success model adopted by the competitor, and I try to follow the same practice in my organization, probably it may not work. It should be achievable and realistic, looking at the business situation, the practical situation in which my business operates. So my SWOT analysis again comes to my rescue over here. So repeating this or revising this again, standards are nothing but performance guys, key performance indicators. And there are three, the standard should follow these criteria or characteristics. Number one, equity. Number two, ownership. And number three, achievable standards. So that finishes our discussion on standards. Then, of course, comes dimensions. Dimensions are the goals of the business. If standards are called as KPI, key performance indicators, then dimensions are CSF. This you can understand. Dimensions are CSF. Okay? So if standards are KPIs, somewhere you can do this mapping. Okay? Here you can understand if standards are considered as KPIs, standards are nothing but KPIs, performance indicators. Then dimensions are critical success factors. What you should understand. If standards are KPIs, then dimensions are critical success factors, and we understood the difference. Critical success factors talks about what organizations are looking at to achieve the excellence. What the question what is answered in critical success factors. These are the areas of concern for the organization and they should be addressed. These problems should be addressed. These issues should be addressed. So that is dimensions. Right? Various dimensions, quality dimension, delivery dimension has to be looked at. Critical success factor. I think you understand what I'm talking. And second is standards. Standards will certainly talk about KPIs, that is how we should achieve these critical success factors. Compare like this, you can prepare your own notes, you prepare your own charts where it is easy to remember the model because these models are theoretical in nature. From exam point of view, when you prepare for the exam, at that time remembering these models and remembering these terms which are used in each model, right? It is better to prepare your own notes or prepare your charts in your own understanding so that you can apply them to the given case. We will complete this. When we talk about dimensions, dimensions are nothing but critical success factors and they are mainly divided into two subcategories. One is determinants, which I talked about. The diagram also that was a mention of determinants. And second one is results. So determinants and results. Which are the determinants? Now there is no need to highlight, emphasize once again. You have already understood quality. Quality is the determinant of the success of the organization. Flexibility is management responsive to the changing factors. Adaptability or flexibility. That is sudden increase in the sales demand. Can we cope up? Can we carry out manufacturing at different locations? If we do not have so much of plant capacity, then can we outsource manufacturing to a third party? Third party manufacturing can it be resorted to in case the need arises, in case there is a sudden increase in that sales demand. So does organization collapse when there is an increase in demand, or does it look at it as an opportunity whereby that opportunity is converted into a strength, right? By resorting to third party manufacturing? That is flexibility or flexible approach. These are the determinants of the success, right? Determinants of the results of the organization. Innovation, we discussed in balance scorecard also. Innovation process that is coming out of the way, out of your comfort zone, out of your standardized approach and thinking out of box. We say giving something to the customers where they are interested in getting every time something new features, added features in the existing. And resource utilization. Resource utilization is utilization of resources that is most important. Otherwise, it will lead to decline in the efficiency. Efficiency is directly the result of optimum utilization of resources. So you have four determinants. Only remember these four words: quality, flexibility, innovation, and resource utilization. Quality, flexibility, innovation, and resource utilization. These four words you remember, and you will be in a position to write one line on this. That these are determinants because the performance areas, these are, you can say, determinants of performance areas on which the overall outcome or the result, success of the organization is dependent. Right? So dimensions, when we talk about, it is determinants and the results. And results is of two types: financial performance and competitive performance. Financial performance and competitive performance. When we talk about financial performance, it is in terms of ROI, RI, EVA, those performance indicators. When we talk about competitive performance, how do we stand vis-a-vis our competitors? And that is what competitive strategy, right? We have to provide products which are of better quality than the competitor, and also that there has to be product differentiation in marketing. In strategic management, we have studied product differentiation. So when we talk about financial performance, of course, looking at providing products at competitive prices to the customers and still maintaining the operating margin. You do not allow your operating margin to get adversely affected. While maintaining the market share, operating margin has to be maintained. And that is a typical paradox or typical trade-off which has to be achieved. All are finance students and have also studied other concepts in or contemporary areas in strategic cost management, that no management can afford to lose its market share at the cost of operating margin. One is top margin and other one is bottom line. Top margin is sales or market share and bottom line is operating margin. So no management can afford to lose its top line at the cost of bottom line and vice versa. Both are equally important. So financial performance, when we talk about, obviously it measures both top line and bottom line, market share as well as the bottom line net profit. And competitive performance means how do we perform vis-a-vis our competitors. That is in terms of product differentiation, provide better quality product, etc. etc. So these are called results. Results reflect the success or failure of the determinants which you have identified above. Result is the tangible outcome. So आपने जो dimensions बात की, dimensions, that was the second word which I made you remember. I said you have to remember 3 words in this model, and 3 words are, look at the chart once again, standards, dimensions and rewards. Each is important. Standards, dimensions and rewards, building block model. So dimensions are further divided into results and determinants. First comes results. So results we have, first come determinants. So first we have determinants like quality, flexibility, innovation and resource utilization. 4 performance measures, determinants, right? And which finally result into tangible outcome, financial performance and competitive performance. Last thing is our rewards. Rewards should ultimately be such that they motivate the people. The rewards should be crystal clear. That means they should be defined properly and controllable also. Right? That is, top management should be in a position to implement the reward in the organization based on the performance. We have performance-based incentive or rewards to motivate the employees, deserving employees. So we always say employees should have higher level of motivation in terms of bonus, performance-linked bonus, in terms of employee welfare measures, and in that way they will be motivated. It is, the reward scheme should be very clear. There should not be any scope for misinterpretation. It should be clearly communicated to the employees in advance what expectation, what performance is expected from the employees and how will it be measured and how it will be rewarded. All 3 things are important. What is expected from employees, how it will be measured and how it will be rewarded. That should be made absolutely clear at the beginning of the year itself to concerned employees, concerned managers at the time of performance review. And last is controllability. Employees should be rewarded or penalized of the result over which they have some control or influence. Yesterday also we discussed divisional managers should not be penalized for factors beyond their control. Certain factors are within the control of the operating manager. His performance should be judged or assessed on the basis of those factors. If anything is beyond his control, he should not be penalized. So reward, same applies to reward also, right? So controllability is an important criteria. So when we talk about rewards, there are 3 words or 3 terms. Reward should highly motivate, provide incentive to the workforce to work and perform. Reward should be clearly communicated and reward should be controllable. That means they should be only the factors for which manager is responsible or factors which are controllable. For those factors only we should be rewarded or penalized. Look at this building block diagram once again. 3 words again, standards, dimensions and rewards. These are 3 words which you should remember. Standards, dimensions and rewards. Standards is at the beginning. Dimensions, of course, at the middle, and rewards, that is the outcome towards the right hand side. Finally, all are towards achievement of overall goals of the organization. So performance measurement and evaluation is well discussed with the help of Fitzgerald and Moon model. It's used in service industry, which is used in manufacturing sector, retail sector, and Australia has started using it in public utility services in transmission of gas, electricity, generation, transmission, distribution, etc. So we take a short break of 10 minutes over here and then resume after 10 minutes. We'll understand this matrix of building block model quickly because some further fine tuning in terms of examples of performance are given over here in this. And then we go to the last model, that is performance prism. We take a 10 minutes break. Friends, we are back again with our discussion on qualitative performance measures. I will take the question which one of the students has asked, and that is on 4 techniques which are used to enhance the EVA. The question asked by one of the students is, "Sir, can you repeat those 4 strategies for enhancing EVA given by Stone and Stewart?" If you recollect that day on Monday, I explained 4 strategies given by Stone and Stewart to enhance EVA. That topic has nothing to do with today's discussion. So I will write down now in the Word file, the whiteboard and the Word file. I am writing down these 4 strategies. Please take down. They are not part of the module. Is it visible to you? I am writing down 4 strategies which are used to enhance EVA. One is status quo. Number 2, growth with profit. Third one is overhaul. And fourth one is minimizing financing cost. I write the title. These are strategies suggested by Stone and Stewart to enhance EVA. They are not part of your module, and therefore you must write down this and understand. You should be in a position to write 2 or 3 lines on each of these strategies. Strategies suggested by Stone and Stewart to enhance economic value added. We discussed in yesterday's class that economic value added is the economic indicator of business. EVA should always be positive. Positive EVA indicates value creation, whereas negative EVA indicates value destruction. This also you can take down. Positive EVA is equal to value creation. Whereas negative EVA is equal to value destruction. This is something which is understood. Positive EVA, every organization should look for consistent EVA, growth in EVA years after years. So EVA always has to be positive. Your strategies, management strategies should revolve around generation of positive EVA, that is creation of value. At any point of time, if value deteriorates, value declines, then that means EVA is negative. And negative EVA in here is certainly not a good sign. You might have, to give you example over here, some of the FMCG companies, they face the issue of quality, right? Some of the FMCG companies, like say for example HUL or Nestle, they face the issue of quality of their finished product. Nestle's case is well known to all of us. That is when in the famous flagship brand, that is Maggi noodles, there was some lead content that was found Obviously, there was a big hype made out of it. The media also flared the whole issue, and there were reports in the newspaper. The analyst also brought out clearly that yes, lead content in some of the batches, some of the packs of Maggi noodles is very high, and that is how most of the people stopped consuming Maggi noodles. It became a threat, right? If you see that particular year in which this incidents happened, the EVA of the company, Nestle, came down drastically because a flagship brand like Maggi getting a setback in terms of its sale because of such quality issue. That is generally a practice you will find in most of the FMCG companies, particularly where the quality of the finished product matters from the consumer's point of view. So management should always endeavor to maintain its EVA not only on positive lines, but also increasing EVA, growth in EVA on year-to-year basis, years after years. Negative EVA or decline in EVA is not looked at positively by the stakeholders. Stakeholders perceive this business as a risky business whose EVA is declining, whose EVA is negative. And in that sense, I discussed there are 4 strategies which were suggested by Stern and Stewart to enhance EVA. So one strategy is status quo. Status quo means as is, where is basis. Don't make any new investment, any additional investment in capex, in capital equipments, any project. Don't start any new project. The existing asset base you use in an efficient manner. You use the existing assets in an efficient manner so that they will produce the return, they will generate the return which is reasonable, which is higher than cost of capital. So don't invest a single rupee in capex, but continue with your existing investments and run the business efficiently so that it will generate reasonable rate of return which is higher than cost of capital. That is status quo. Kuch mat karna, as is, where is basis. Growth with profit. Obviously, the first strategy doesn't work at all. It is good in theory, but many organizations, practically every organization will look for growth. That's what I said. And growth has to be with profit. You cannot just afford to grow without increase in profit. So growth always goes hand in hand with profit. So Stern and Stewart suggested that you invest in those areas, in those businesses, or maybe in existing business also, where you generate adequate return, adequate profit, and that profit generated from such business is more than cost of capital. Profit generated from business is higher than cost of capital. So that is growth with profit. Third strategy is overhaul. I mentioned this overhaul word in context of engineering maintenance. We say machines have to be overhauled. Machines have to be oiled. They have to be refurbished. Why? Because you need to improve the working life of the machine. Same way, overhauling here in context of EVA means overhauling the business activities, creating turbulence in the business, mergers and acquisition, restructuring, internal restructuring, acquisition of new businesses, hiving of hiving of divisions which are not making profits, brands which are not yielding positive contribution, hiving of such brands. So that is doing some sort of restructuring in the business or business model so as to bring positive EVA. So that is overhaul of the business. And last point we discussed was minimizing the financing cost. Management should always be alert and vigilant in capturing the effect of changes in the market, capturing the effect of changes in the market in its strategy. That means if the financing strategy, investment strategy, and so on. That means at any point of time, if the rate of interest on borrowing has gone down, then management, the finance manager should take immediate action. This is responsive effect. He should be responsive enough. See changes, alert and vigilant so as to make changes, retire the existing debt carrying higher rate of interest and substitute it with a debt carrying lower rate of interest. So it is changing the terms and conditions of the debt, corporate debt restructuring, CDR. In case of project finance, we talk about loan syndication, we talk about consortium arrangement. All this you must have studied in SFM, Strategic Financial Management. Consortium arrangement where there is a lead banker, where there are support bankers who all come together in financing an infrastructure project. The infrastructure project, risk will be shared by all the lenders. One single lender would not like to undertake the risk. So there is a lead banker concept and support bankers. So all this is arrangement which is called consortium arrangement, minimizing the financing cost by tapping all these sources of finance, particularly for long duration infrastructure projects, thereby minimizing the financing cost. Continuously having interaction with the lenders with for exploring new terms and conditions of the loan, for getting the best deals in favor of the company. All these come under minimizing financing cost. So sometimes coming out with hybrid instruments also, debentures, bonds, which are convertible, so that in initial years you pay interest and thereafter get converted into equity shares. Right? So there are ways and means of minimizing financing costs. You can expand over here. But these are four strategies suggested by Stern and Stewart to enhance the EVA. I think I have responded to the question. All other questions are not relevant because they are not questions. What happened was initially the screen was not visible and therefore some had written about the brightness of the screen or video to be made clear, but that was the initial exploration that was going on by 10 minutes. Alright, now I think the screen is also student has written, video provide classes. Institute ICAI about it. We will log on to the Institute's website and get to know about the classes, the crash courses or otherwise for regular classes for law and knowledge. Check with by writing email to Board of Studies and they will give you the information. I don't think any other query is there as long as these theoretical models of theoretical performance measures are concerned. Okay? Okay. You can see the slide. We will no. Any share screen is not not network problem. Share screen I'm clicking but it is not going. Okay. So we were talking about model, which is building blocks model, and this diagram we have seen Fitzgerald and Moon's building block model. I asked you to remember three words: standards, dimensions, and rewards. Standards have to be clear, that is, they should be fair for all the functional areas, they should be achievable, and manager should take ownership of those standards. That means manager should own those, take the responsibility for achievement of those standards. Dimensions divided in two parts: results and determinants. Determinants, of course, are performance measures, and different performance measures, that is determinants, which are reflected quality, flexibility, innovation, and resource utilization. Right? These determinants finally result in tangible outcome in the form of financial performance or competitive performance, where are we doing best vis-a-vis our competitors. That is sort of comparison that is made. And third one is rewards, which is the final outcome. Rewards should be very clearly expressed to all the employees, the managers at the beginning of the year, so that they are motivated. Reward scheme should be highly motivating and should be made responsible. Managers should be made responsible for factors within their control only. Factors which are beyond control of management, they should not be made responsible for those factors. So everything is summarized in this grid. You can see this grid, result and determinants framework. So this building blocks model is summarized, number one, in terms of that diagram, and number two, in terms of this grid or the matrix. In this matrix, if you go down, on left hand side, there are two measures. One is result. And second one is determinants. You can see results and determinants. Determinants come first because they are the reflection, they are the performance measures. So when we look at quality of service, some examples are given over here. When we mainly determinants are quality of service, flexibility, resource utilization. We discussed this in detail prior to break, and innovation. So some examples are given over here of each of these determinants. When we talk about quality of service as a determinant, right? Reliable quality, responsiveness to the customer's demand, aesthetic value of the product, appearance of the product, and clear communication to the customer, comfort level, friendliness, courtesy, competence, access, availability. You don't have to remember all these words, but some crux of this you can bring in your own style, in your own expression. Of course, security, that is, customer should feel secured about the product when he buys that product. So that is also reflected in the quality. And communication. Right? There should be clear-cut channel of communication where the purpose for which the product is designed should be communicated beforehand to the customer, so that he expects on those lines, and he will always compare what was assured to him, whether it is being delivered or not. So communication has to be complete and clear in terms of quality of service. So these are some of the parameters in determinant by name quality. Quality as one of the determinants, these are the parameters. Flexibility as one of the determinants. The parameters are flexibility of volume. As per the requirement of the market, you should be able to cater to the market demand. Delivery speed according to customer's need, and specification flexibility. Right? Customers may require different variants of the products, different specifications of the product, so that flexibility has to be brought in. Then talking about resource utilization, productivity and efficiency. How optimally your efficiency, productivity goes hand in hand. Efficiency in service, productivity in production. Right? So utilization of resources to the fullest extent, so that no resource remains unutilized, and at the same time we ensure that all resources are optimally used or judiciously used for higher profitability, maximizing profit. Innovation, performance of the innovation process and performance of individual innovations. Right? Is there a philosophy of continuously exploring new products, new designs, new territories, new markets? So that is in the blood of the management. That we say philosophy. Innovation is a process, and individual innovations also. That means in each type of product or category of product, what kind of R&D work takes place. R&D, research and development, is certainly a reflection of the amount spent towards innovation. Right? Innovation, you require a lot of investment to be made. Most of the pharma companies spend nearly 30 to 35% of their revenue on R&D activities, because only when the new molecule is developed, only when the new product is designed, then only it will be able to cure the diseases in the economy, diseases among the people at large. So you have the grid which has both the columns, determinants and results. And results we discussed are of two types: financial performance and competitiveness. That is competitive performance. Financial performance in terms of profitability, liquidity, capital structure, market ratios, all these are quantifiable results. And competitiveness in terms of sales growth, relative market share, market position, measures of customer base, divided into different territories, product segment wise, geographical location or region wise, etc. etc. So competitiveness and financial performance both are results. Results is the final outcome. So remember three things, three words again: determinants, results. Right? Both are important parts of dimensions. So dimension is a macro term, dimensions of performance, that will comprise of determinants and result. Apart from dimensions, there are two more words: standards and rewards. So again and again, I am emphasizing on these three words because this is again the model which is some of the case studies also cover application of this model. We go to the last model. Before that, once again a recap or a revision. We have seen four types of non-financial performance measure. One is triple bottom line reporting, TBL. Second one is performance pyramid. No, second one was your balanced scorecard. Third one is performance pyramid, what we have seen. And fourth one is this performance prism. Now what we are going to see. So right from TBL, we have different non-financial performance measures that are used for evaluating performance of individual divisions or the organization. Look at the performance prism, how it looks like. A typical prism has got various dimensions. Comprehensiveness of performance prism. It is to some extent close to the balanced scorecard approach which we discussed. In balanced scorecard also we had understanding of overall comprehensive success of the organization. Comprehensive or holistic approach in terms of satisfaction of stakeholders, not only financial perspective but also internal processes, internal business processes perspective, customer perspective, and learning and growth perspective. Similarly, when we look at performance prism, in front of the performance prism, you have capabilities. Capabilities is competencies of individual employees. Skill sets. You have processes in place. They are in the forefront. And the strategies. So top management will design the strategies, will ensure that these action plans are implemented, and operating managers certainly will have the processes which are aligned to execute those strategies. So processes are all put in place to execute the strategies, to bring those strategies into practice, and with the help of course, competent employees, with the help of capabilities, skill set of individual employees. And therefore, these things are at the forefront. And we have on the top, of course, stakeholder satisfaction. We don't say shareholder satisfaction, stakeholder satisfaction. And towards bottom, we have stakeholder contribution. Right? That is what contribution does management needs from its stakeholders. And it is like rights and responsibility, rights, authority and responsibility, rights and responsibility. So when you look at shareholder satisfaction, what do you expect as management? What contribution does management need from the stakeholder? That is at the bottom. So performance pyramid was looking at performance pyramid focused on standards, then dimensions and rewards. Performance pyramid focused on standards, dimensions and rewards. Whereas performance prism focuses on capability of the individual employees, the processes in place, implementation of strategies into actions, and also shareholder satisfaction and contribution. So these are 5 key factors which are given in the performance prism. This particular concept was originated or created by Andy Neely and Chris Adams. Every new theory is propounded by some of the other authors. So Andy Neely and Chris Adams, they are the generators or creators of this performance prism. Right? It mentions that the better known balanced scorecard framework only focuses on two sets of stakeholders, shareholders and customers. Right? That's a basic difference between balanced scorecard and performance prism. In balanced scorecard, we had perspective, financial perspective from shareholders' point of view, and we had a customer perspective from customers' point of view. But here, performance prism talks about overall stakeholders, all the needs and requirements of all stakeholders. So all stakeholders will consist of lenders, vendors, financial analysts, government agencies, all the business associates who are having their association with the business. So this is in contrast with performance pyramid, which tends to concentrate on customers and shareholders, and is also in contrast with value-based management, which prioritizes need of shareholders. All of you might have heard of this concept of value-based management. That means we provide value to the shareholders. Shareholder is at the back of our mind. Management always thinks of shareholders. That should not happen. Performance prism is again a holistic approach, more comprehensive approach than even balanced scorecard. That's how it was analyzed, or that's how it was criticized by this Neely and Adams. They said that in balanced scorecard, the intention was to satisfy only shareholders and customers. But here we are satisfying all the stakeholders, right? Right from the beginning, right, till the end. That means till their expectations are met. So it's a 5-facet model, 5-dimension model or 5-facet model. So it is called performance prism. They are strategy formulation and measurement design. First is of course very self-explanatory. So you can, I think there are no queries on this. Stakeholder satisfaction. Organization needs to focus on who are the stakeholders and what are their needs and wants of the stakeholders. So list down all the stakeholders. The smallest player in the value chain in the business model you need to list down and understand is that party's expectation. Strategies, what strategies you are required to design or fulfill the wants and needs of the stakeholders. Processes have to be in place for satisfying the above strategies. Capabilities of the organization, that means the plant capacity, availability of skilled manpower, availability of adequate infrastructure for operating and enhancing the processes. What's the use if I have the processes in place, but there is no infrastructure to enhance those processes or operate those processes? So capability is very important. And last thing is stakeholders' contribution. Just as stakeholder satisfaction is relevant, what does management expect from the stakeholder? What contribution management expects from the stakeholder? So it has 5 facets. These 5 facets, just as in Porter's 5 forces model, you remember 5 different factors, right, which affect the market demand or which determine the success of the organization. Here also you have to remember 5 facets or 5 dimensions of performance prism. And these 5 facets or dimensions are stakeholder satisfaction on the top, stakeholder contribution at the bottom, and 3 facets which are at 3 different sides, 5 dimensions. So 3 different sides in the forefront and towards the side. One is process in place. If processes are in place, you should have capable staff, infrastructure to enhance and operate the process. Of course, top management strategies which need to be implemented. So performance prism allows the organizations to develop strategies, business processes and measures geared to specific needs of important stakeholders. By taking a broad stakeholder perspective, which includes even government authorities, regulators, business communities, it enables organization directly address the risks and opportunities in the business environment. That means the SWOT analysis which I was talking about, which every business has to carry out. What are the threat areas, areas of improvement, risk areas, probable risk areas or issues or concerns can be addressed, right, by looking at, by first of all listing down and then looking at each of these facets of the performance prism carefully. Using performance prism, it is easy to develop the measures for each stakeholder, and that will facilitate communication and strategy. Now, all these measures, performance measures which we looked at, and not particularly the non-financial measures, they will derive certain benefits. So let's look at what are the benefits from the performance measures. Whether they are quantifiable, that is financial performance measures, or non-financial performance measures, will result into benefits or advantages as under. These are advantages of performance measures. Self-explanatory again, develops agreed measures of activity. You can always compare the targets, benchmark what was agreed upon, and that enables you to perform towards achievement of those objectives. Right? If you don't have performance measures, there is nothing to achieve. As simple as that. Performance measures are performance indicators. Performance measures are benchmarked, are targeted, laid down. Then you can have something to compare with. Clarifies the objectives of the organization. Finally, these objectives have to be translated into quantifiable measures, and that is performance indicator. Greater understanding of the processes. It gives me an opportunity to introspect into my own business processes and align those processes in order to map with the strategy and corporate vision. Every time link with corporate vision, very important. Help facilitate comparison between the divisions. We are inter-firm comparison, interdivisional, intra-firm comparison. That is facilitated because we have some performance measures. Promotes accountability to the stakeholders. Again, same. I have something to compare with. I will always be on my toes. I will be always accountable. And overall response, we started Monday's class with the concept. Overall responsibility to the stakeholders, accountability to the stakeholders will be achieved, promoted if we have performance measures. We are discussing benefits of performance measures. Helps in setting up of targets for managers. Yeah, when you talk about performance review, performance evaluation, obviously individual managers' targets have to be laid down. Then the actuals can be compared with these targets. So performance review will be very smooth or easy if KRAs or KPAs, I discussed this in Monday's class, result areas or key performance areas are highlighted at the beginning. It helps facilitate comparison between different organizations, that is inter-firm comparison. Inter-firm and intra-firm. What are the problems in implementation of performance measures? Having discussed all these performance measures, we have discussed various performance measures like triple bottom line, balanced scorecard, then performance pyramid. We discussed performance prism, and all these performance measures have certain drawbacks or lacunae or some difficulty in implementation. What are the problems encountered by the management in laying down the performance measures or use of performance measures? See, somewhere in the case study, this aspect also would be highlighted. Or you as management consultant will have to bring it to the notice of the top management that probably these difficulties, these problem areas, you cannot lose sight of while implementing the performance measures. Which are the problem areas? Yeah, it's very easy to say that performance measures very easy to quantify. I know customer quality, I know overall stakeholder satisfaction, ROI, EVA, all said and done. But the fact remains that yes, there are difficulties in implementation of or in use of these performance measures. First one is undue focus on measurements to the detriment of other areas. It's always the lacuna in framing or defining the vision. There are always brainstorming sessions at the top management level. Many companies again and again have their outbound sessions on defining the vision for the company, vision for the organization. And this vision needs revisiting. I know that in 2030, now looking at our pandemic situation now in 2020, vision may have to be redefined now for next 10 years, next 5 years, right? Vision which was defined at one point of time now may not hold good, may not be realistic looking at today's situation. So to some extent that vision will have to be redefined. So vision is something which may focus at only certain areas where management thinks that focus is required, focus is needed, and it is at the detriment of other areas. That is possible. It may not happen every time. but it is possible, right? So, for example, a business school or a management school, I have seen writing a vision that we would like to achieve academic excellence. Now, this is a lopsided vision. देखा जाए तो this is a lopsided vision. We want to achieve academic excellence over next 10 years. Now, this is not a complete vision because academic excellence is only one part of the overall success of a B school. When we look at the B school dynamics, I am giving you an example of a business school. When we look at business school as a model, a business model of performance, one should be concerned, stakeholders are concerned not only with the academic excellence, but they also look at quality of research that is conducted by their teaching faculty, quality of research conducted by their professors, the publications which their faculty members come out with. The research is finally converted into publications where research papers or articles are published in research journals, magazines, international magazines, renowned magazines, and that also is one of the parameters when you talk about success of a business school. When business schools are rated, and there is a rating and ranking of business schools at a time of B school survey, all these parameters are taken into account. It is not only academic excellence, but of course the skill sets of the faculty in conducting research. It also talks about overall institutional development. Is there a growth of the institution over the years, and is there an attempt to develop or grow it further? So that means overall in terms of student size, in terms of increase in the infrastructure, providing value-added education to the students, etc. So always we talk about overall stakeholders' overall interest being taken care of and incorporated in the vision. So sometimes it may so happen that while using the performance measurement against the vision itself may not be defined properly. So tunnel vision bolte hai usko. Tunnel vision means a lopsided vision, where undue focus is on measurement to detriments of other areas. In order to achieve the vision, somehow I will ensure that my targets are achieved. Sub-optimization. Yeah, these are all related points. Focuses on one measurement to the detriment of others. There are different, again, here it is undue focus on measurement to the detriment of others. Here it is so lopsided, focus on one measurement to the detriment of others. Now, sub-optimization. Ultimately, we should optimize all the performance measures in balanced manner, right, for overall growth. What happens is we look at ROI as one of the performance measures, and everyone concentrates on growth or increase in ROI. But residual income is equally an important criteria. So time and again I have been mentioning that yes, there has to be an inclusive approach where all these performance measures are used in a comprehensive manner. So there is what I said, judicious use, right, or in conjunction with each other. These performance measures have to be used in conjunction with each other. Sometimes top management may focus too much on short-term measures and not looking at long-term. Too much on short-term measures and not looking on long-term. That is a myopia. A myopia is the typical word that is used in management. Myopic approach, focusing on short-term. मुझे ROI improve करना है, ROE improve करना है. Residual income, EVA should be always projected on increasing basis. So in order to achieve or reach that particular goal, short-term goals, we may use focus on long-term approach also, long-term vision as well. And that is not correct. Misrepresentation, not representing the data correctly. All of you know, we discussed as one of the drawbacks even in balanced scorecard model also, that data may be manipulated, data may be projected or presented in such a manner that it satisfies the needs of top management. Data may be projected or presented in such a manner that it will meet the needs of the top management. So in the process, there is a misrepresentation of information and the stakeholders' interest is not protected. That is again a practical difficulty. Data manipulation practice or tendency towards manipulation, misrepresentation. Misinterpretation is another point, misinterpreting the data. Unless the data is interpreted correctly by the end users, the purpose is not served. Stakeholders should be able to read between the lines and get clearly the valuable inputs from the data which is presented or published in the annual reports or in the financial domain or in public domain. So misinterpretation is another problem of using performance measures. What has gone in calculation of ROI, what has gone in calculation of EVA, that should be made crystal clear. And ossification, keeping of out-of-date measures. That means some of the performance measures may not be relevant in today's times, but just because they have been kept on record, for example, maintaining a physical record of documents. Now it is very easy and very nice to keep the physical record of each and everything that is in terms of documents. But nowadays we are talking about cloud technology. Everything being saved in the cloud, everything being available in the shared folders, in the shared formats. So if any parameters or performance measures have become out of date, not relevant in today's context, they need to be replaced with more relevant performance measures. So these are few limitations of performance measures, you can say, which may hinder successful use of performance measures for purpose of comparison with actuals. One small point was left out, and that was commonality among all these performance measures, common factors among particularly non-financial performance measures. So I go back, purposely I had kept it so that I will visit it towards the end. This is the common point, commonality among all performance measures. Mr. Oatley, David Oatley in 2005 observed that various performance measures we discussed with Gerard's framework, balanced scorecard by Kaplan and Norton. We discussed Neely's performance prism, so आप performance pyramid बोलो, performance prism बोलो, balanced scorecard, or any or even triple bottom line, any of these non-financial performance measures, right, will have their own pros and cons, right, and everyone will try to show one up over the other approach. That we are looking at stakeholders and not shareholder. That was claimed by performance prism, that was claimed in the performance prism concept, and how we are superior to balanced scorecard. That was projected by Neely in the performance prism matrix, performance prism diagram. So there are, of course, pros and cons of each non-financial performance measure, but there are some common threads in all of them. So all these performance measures should follow the common criteria, and that is very important. Again and again I have been talking about they should be allied to corporate strategy. That is, proper mapping has to be done with corporate strategy. Corporate strategy is the final strategy which has to be action plan. Strategy means action plan, which has to be put into place and which has to be achieved, right, whether the operating managers like it or not. Their views are taken into account, but if there are any practical difficulties or bottlenecks in achievement of those action plans or strategies, then it has to be discussed, deliberated, because we cannot compromise on the final goals. So आप कोई भी performance measure use करो, you may use EVA, you may use ROI, you may use performance pyramid or performance prism, but ultimately all these measures should be aligned to corporate strategy. Most important. They should include internal as well as external measures. We discussed about external effectiveness and internal efficiency, right? All the aspects should be taken care of. How do I perform and how it is perceived by my customers, by my stakeholders. My performance is only unilateral in one direction, but how it is perceived by the external market, by the external stakeholders. So all these performance measures must target towards, must be oriented towards internal as well as external measures. They should contain both financial and non-financial. That's what I said. As much as possible, we should be able to quantify. So when we say customer satisfaction, to what extent customer is happy? Say customer surveys you conduct and you quantify in percentage. 72% customer was happy. 85% customer was happy. So still there is some scope for improvement. So everything should be quantifiable as much as possible. Whenever we talk about quality, also quality is quantifiable in terms of quantity. All of you have learned quality costing. That is various costs which are associated with quality of the product. In the same paper, strategic cost management, you have learned quality costing. So gone are those days when we used to say quality cannot be quantified. Nowadays even quality can be quantified because quality costs can be tracked and one can circulate the MIS reports on regular basis across the organization, within the organization, to understand what are the quality standards, quality costs which are budget versus actual, right? The exception reports. So financial as well as non-financial measures should be touched upon in performance measures. It should be explicit trade-off between different dimensions of performance. We discussed dimensions of performance in that performance pyramid where dimensions has got two parts, and both the parts we discussed, we have, you have forgotten those. I shared it in the Word document. Written it on the top. Standards and dimensions. Standards are KPIs, dimensions are CSF, critical success factors. So you have both. So different dimensions of performance, and give different examples of dimensions. We have seen quality as dimension, delivery, effectiveness in delivery, quality, also the after sale service. Include all important but difficult to, it should include all important but difficult to measure factors as well as easily measurable ones. See, while designing the performance measures, one should not take into account only factors which are easy to measure. Factors which are difficult to measure also one should take into account. Just now I gave you example of customer satisfaction. One can say that customer satisfaction is a qualitative term. How can I quantify? Why not? You can conduct customer surveys, and after every customer visits your showroom or visits your retail shop, visits your premises, and you can ask him to just log on, ask him to just press on the customer satisfaction icons, right, whether he is satisfied on 1 to 5. Same thing happens when you take the faculty feedback, faculty feedback give. At that time they look at this performance, that performance dimension, and that is whether satisfaction of the student in terms of getting value addition from the faculty. So different dimensions of performance. There has to be a proper trade-off. When you look at the quality, delivery is equally important. When you look at timely delivery, at that time confirming to the specification is equally important. So there are always trade-offs and you have to maintain a proper balance. Also easily measurable and not so easily measurable factors like quality, like satisfaction level of customers have to be roped in, and it considers measures for managers and employee motivation. Ultimately, कोई भी आप use करो performance measure, it should always be oriented towards motivation of employees and managers within the organization. That's it. We have completed our discussion on performance measures. In the case study which comes in the examination, you may not have, I said, application of all the performance measures. Only some of the performance measure, 2 or 3 may be used. In one of the classes, if time permits, we look at the question that was asked in November 19 exam, November 19 CA final exam, on application of these performance measures. I told you generally the weightage for this particular chapter is around 1/3 of the total weightage. If the total paper is of 120 marks, then 1/3 weightage around. The studies of 20 marks cover one or the other performance measure or 2 or 3 performance measures. And if you study the past question papers, the trend or the pattern, you will come to know that yes, sometimes balanced scorecard coupled with triple bottom, sometimes coupled with financial measures like EVA, ROI, etc. And therefore you cannot afford to leave anything for option. 100%, my dear students, please understand, in CA final, % coverage of the syllabus is very, very essential, very important. With this, we come to the last part of the topic, chapter on performance evaluation, and that is on benchmarking. I would like to take case studies in the next class. So I would like to complete the theory portion. Last class we had understanding of financial performance measures. today's class we had understanding of qualitative performance measures, qualitative that is non-financial performance measures, and also now we are now understanding benchmarking. All the theoretical part is taken care of. So now we can start with some discussion on case studies or case rates, right? And how to attack, how to approach, particularly when answering those cases that we will understand from the past question papers, so or maybe from the past suggested answers, and also from the RTP or mock test papers which are uploaded on our institute site by BOS. So please study them beforehand when you attend the class. Let's take this last concept, and that is benchmarking. In simple words, if I had to now just listen to me, I don't want to share here at this moment anything over here. It's all given in narrative form, as you can make out. Given in narrative form. Understand in my own words, benchmarking is nothing but continuously looking at the competitive practices followed by the competitors. Continuously looking at competitive practices followed by the competitors, so that the organization can copy. Copy here does not mean verbatim copy, but adopting some of these practices which are considered to be representative practices, some of the practices which are benchmarking practices, representative practices, right? Ideal practices can be replicated, can be copied, can be repeated in my business. If my competitor is succeeding in his business, what are the success factors responsible for his success? Right? What are the areas in which he has been successful? Let me study his business model and try to replicate that model and follow the practices in my own business. This is called benchmarking. So benchmarking is a very versatile tool that can be applied by the management, where you copy some of the practices which are followed, representative practices, ideal practices, best practices that are followed by the competitors, and replicating the model, others' business model in your business, not by just doing copy paste, but by adapting to the changing requirements of your business. I repeat, not just doing copy paste, but adapting yourself to the changing requirements of your business, in tune with changing requirements of your business. So that means if your business wants to have more focus on certain areas, then even if the competitor is following those practices, you need not repeat the same practice in your business. So benchmarking cannot be done with a blindfold approach or in a blind manner. It has to be done with conscious efforts and also with proper vision at the back of our mind. Now, what are the different types of benchmarking? They are discussed over here. You can say benchmarking can be broadly divided according to me, though in the module it is given different types, but there are subtypes actually. In my view, the benchmarking can be divided into two types: product benchmarking and process benchmarking. So, if I want to write in the Word document, product benchmarking and process benchmarking. These are two broad classification of benchmarking. Benchmarking, we have product benchmarking and we have process benchmarking. In my opinion, these are the two broad categories of benchmarking. Product benchmarking, where I know that, by the way, product benchmarking is also known as reverse engineering. Some of these words which may not be in the module, you should know. Reverse engineering. Why it is reverse engineering? In engineering, you design, innovate, explore the new product, develop and design the new product. And that is what is engineering. Uska opposite, reverse engineering. That means already the product has been successful at a competitor. Let me study the features, salient features of the product. Let me study the performance standards of the product and try to bring that product with slight modification here and there in my organization. So that is what is product benchmarking. So we may not copy the same product and bring it in our own business, but we can make small variations here and there, modifications in the product design, catering to the current needs of the customers, and that is what is reverse engineering. Right? So product benchmarking is again a very good practice so long as you are able to cater to the requirements of the consumers and also maintaining the features of the product for the purpose for which that product is designed. That is product benchmarking. When you talk about process benchmarking, right, it is the activity of measuring discrete performance. Process benchmarking is activity of measuring discrete performance and functionality against the organization, right? Particularly in supply chain management, I would like to give here an example of process benchmarking in supply chain management. I don't know whether you are aware of this, or you would have learned this. Mumbai Dabbawalas is the best example. Mumbai Dabbawalas in supply chain management, SCM. By the way, in the same paper, you are also studying supply chain management. You know, there are lakhs and different offices. All of them require lunch and that too homemade lunch. And now particularly with this market situation right now, the pandemic situation in the market right now, it is better homemade food than the outside food. So homemade food is given early morning. I have to leave my house, the office in the town or in the city. Now it may not be possible to carry the tiffin with me, or even if I carry it may get cold. So that is the concept of Mumbai Dabbawalas in Mumbai, who operate, and it's an excellent model of supply chain. And IITians did detailed research and also they developed a case study on Mumbai Dabbawalas in supply chain management. If you Google out, you will find IITians case study which they have developed, which they have written on Mumbai Dabbawalas as the classic, or I should say excellent example of excellence in supply chain management. So what is Mumbai Dabbawalas? Ultimately, they ensure that the tiffin reaches the desired office, the desired person, right, for whom it is meant at the appropriate time, right time. Lunch time is from 1 to 2. So sharp at 12:30 or 12:45, just prior to lunch, everyone, there are hundreds or thousands of employees working in that building, in that organization, all across. Oh, yeah. Okay. Is this visible now? Hello? Now fine. I'll once again share the road just now. See now whether it is visible. What is visible? Word only I am showing. So, wait. Yeah. I was talking about two main types of benchmarking. One is product benchmarking and other one is process benchmarking. So product benchmarking is reverse engineering, right? I mentioned that engineering means creating something, new product, new design of the product. Reverse engineering is exactly opposite. Already there is an existing product in the market. So now catering to the changing requirements of the consumers, I bring a modified version of that product in my organization. That product has been successful in the market. So we now bring a modified version of that product in our organization. So we are not copying someone's product features, but these product features are suitably adapted, right? There is a famous case study written by IITians in this area of supply chain management by Mumbai Dabbawalas. At 1 o'clock sharp or before 1 o'clock, before lunchtime, in respective offices and in the name of the concerned employees. Thousands and thousands of employees are working that particular organization in the same building, and all these employees get the lunch, homemade lunch, at the right time, in the right tiffin. So there is no exchange of tiffins at any point of time and no delays. So how do these people are not highly educated. They travel in trains from suburbs to the city and deliver the dabbas, deliver the tiffins. Right? Classic example, an excellence in supply chain management where we can copy some of the best practices followed by the competitors. May not be in the same line of business, but as modified, suiting to our requirements. So that is process benchmarking. And further process benchmarking is divided into subcategories. They are all variants of process benchmarking. One is competitive benchmarking. In competitive benchmarking, what happens is comparison is made across different functions, HR, finance, R&D, marketing. So it goes beyond the product. Competitive benchmarking goes beyond the product. That means comparison is made with the competitors. What are the HR practices followed in the competitor's organization? Right? Some of the HR practices which my competitor follows are the best practices. In terms of practices can be replicated, or marketing practices in terms of new product launch, in terms of new marketing strategies for product launch or for developing new territories, right? Or for spending on the banners, posters, advertising. These things can be studied. So marketing strategies also can be adopted and adapted, of course, suiting our requirement. R&D strategies, finance strategies, yes. So always the top management should be positive in its approach, receptive in its approach, and should look at what are the practices followed by the competitors in the same business and try to bring those practices which are representative ones, which are ideal ones in your own business. So that is competitive benchmarking across the functions. So I write competitive benchmarking is always across the functions like HR, finance, marketing, HR, finance, marketing, R&D, etc. So across the functions. This is again a variant of process benchmarking. We have internal benchmarking where we look at the internal processes. Internal benchmarking is within an organization by comparing the performance of similar business units. Right? We have different SBUs, strategic business units. So one business unit is following, say purchase department is following a particular practice, procurement is following a particular practice. Why can't we have same practice, similar kind of practice in our own function? That if they invite quotes or tenders and have dialogue or negotiation with the vendors, even while awarding contracts also, right, particularly in HR or in administration, we can also follow the same practices, invite 2-3 quotes and have a dialogue discussion with these vendors, with these contractors, right? So internal benchmarking is basically within the business unit, that is within the business unit, same business unit, within the business organization, across different units. That is internal benchmarking. You should know different types of benchmarking. Next one is strategic benchmarking. They are discussed depth at length in your module. But when you talk about strategic benchmarking, obviously it differs from the operational benchmarking in terms of its scope. It helps to develop a vision of changed organizations. Right? Basically, strategic means it will develop core competencies. Management should look at its core competencies. You can take down this matrix or this particular chart which I have written. Benchmarking of different types is easy to remember from exam point of view. When you talk of product benchmarking, it is reverse engineering. Process benchmarking, best example, process is internal, realigning the internal processes, right, in comparison with best practice processes followed by other organizations. May not be the same type of organization anybody else, like Mumbai Power. Competitive benchmarking, that is within the functions, HR, marketing, etc. etc. That's what I discussed. When we talk about internal benchmarking, it is within the business units. It is across, I should say, across the business units, within the business organizations. Across the business units. If procurement function is following a particular practice, why not follow the same practice which is representative, which takes care of my internal processes also across business units? The internal benchmarking. And strategic benchmarking is looking at the core competencies which will help in having sustainable competitive advantage. So competitive strategic benchmarking talks about bringing competitive advantage over others. This is the buzzword today, competitive advantage. Strategy, we always talk about competitive advantage. Somewhere in your answer, in the analysis of the case study, you must mention this keyword or buzzword, competitive advantage. Today we are operating in the environment where there are number of competitors. And if customer gets n number of options, how I am different from the competitor? Competitive advantage. So look at my core competencies and try to excel in that core competencies. So that is strategic benchmarking, right? So, and one variant of this last one is global benchmarking. Now, the best example of global benchmarking is company like Ford, for example. Ford company of US, you have heard, benchmarked its accounts payable function with that of Mazda in Japan. Right? You can give here the example of Ford company of US benchmarking its accounts payable function. Accounts payable function. This data may not be available in the module, and therefore you can remember and quote these examples. Ford company of USA benchmarking accounts payable functions with Mazda Japan. At one point of time, Ford company used to have around 500 employees in its finance function, only in accounts payable function. Payable function in finance, it used to have around 500 employees. Now they realize it is adding to the cost. So much of manpower, unwarranted manpower when not required, will add to the cost. So where can we reduce the cost? Where can we optimize? They studied the business model of Mazda, particularly when they compared their accounts payable function. Mazda was operating only with 5 people, only with 5 persons against 500. That was the comparison that was made. 5 persons against 500, approximately. This is a classic example. In US, Ford, they were employing 500 people in a function, which was not required. And Mazda, because of automation, process automation, system automation, you have now SAP everywhere, that is ERP everywhere. So all functions are integrated. Why you need to have so much of manpower in one particular function? You can be lean. And one of the topics again in this paper, you are learning about lean accounting, L-E-A-N, lean accounting. How to become lean and how to reduce our size in terms of resources so that our ROI will improve. Again, talking about ROI, return on investment, reducing the size of investment and improving the returns. So they learned this practice from Mazda, and Mazda used to employ only 5 persons in their accounts payable function. So I would say global benchmarking is an extension of strategic benchmarking to include the benchmarking partners or benchmarking practices on a global scale. So these last 4 types of benchmarking, that is right from competitive, global, competitive, internal, strategic and global, competitive, internal, strategic and global. These 4 benchmarking practices are variants of process benchmarking. According to me, mainly there are 2 benchmarking practices. One is product and second one is process. And within process, we have competitive, internal, strategic and global. Okay. So this is all about benchmarking. Coming back to the conclusion, the module. These are the types which are discussed. So you have a look at this. Intra-group benchmarking, intergroup. Process of benchmarking is given very clearly. There are some difficulties in implementation of benchmarking, and that is also very important. What are the difficulties or disadvantages? implementation of benchmarking practices. Some of these limitations are pertinent. One is benchmarking is time consuming. Even somewhere bear with me for 5 more minutes. Difficulties in implementation of benchmarking. It is time consuming. Right? To compare yourself, your process and your model with a successful model in the business, in the same kind of business, requires a lot of efforts, a lot of manpower, and it's a continuous process. So it is very much time consuming. It requires staff and the resources. First point. Second point is about lack of management support. There may be resistance from employees, right? It requires direct involvement of senior managers. And this is a philosophy, just like balanced scorecard. The philosophy is at the top level. And it cannot be delegated to the operating managers. It has to be at the top level. So it cannot be delegated. There is resistance from employees sometimes to implement this benchmarking. If their support is not available, then it is difficult to follow the benchmarking. Resistance from employees. Then you have one more limitation, and that is key element in benchmarking is adaptation of best practices to tailor it to the company's needs and culture. I talked about copy-paste model. Some organizations do verbatim copy-paste or verbatim repetition of the same practice. That copy-paste attitude will not work at all. Right? This is totally condemned. This is criticized, and benchmarking will fail if there is an exact verbatim reproduction of the same model. In fact, that will never be successful because two business organizations operate under different circumstances, under different conditions, and therefore some adaptation is required to be made. And sometimes the goals remain only on paper. That is also a drawback, that goals always remain on paper, not to improve the process, but to match the best practices at any cost. The endeavor of the operating managers is to achieve the compliance, follow the best practices at any cost. It may not result in improving the process. Finally, benchmarking हम क्यों follow करते हैं? Why we follow the competitor strategy? Because I want to improve my processes, and therefore we follow competitor strategy. But our attention may get lost from improving our processes, and we may concentrate only on achieving the compliance, or that is following the best practices at any cost. So friends, we have come to the last part of this chapter. This we will take in the next class, and that is performance measurement in not-for-profit organizations, NPOs, not-for-profit sectors, basically charitable, voluntary organizations and NGOs. This is the last part of the chapter which I will cover in the first half. Then we will complete our case study. Thank you very much for your patience.